that President Xi Jinping has the ability to serve as lifetime president. The Shanghai Composite Index closed down 0.2%. Wall Street stocks closed mixed on Friday, but on a week-on-week basis, stocks there were down. Investors are still reeling following US President Donald Trump's announcement to levy heavy import tariffs on steel and aluminium. The Dow Jones Industrial Average fell 0.29%. The S&P 500 gained 0.5%, while the tech-heavy Nasdaq Composite added 1.1%. Let's find out what's happening in the markets closer to home. Nompumelelo Siziba is at the Johannesburg Stock Exchange. Good afternoon, Nompumelelo. Tiger Brands not doing so well this morning.
No, not doing very well at all, Nzinga. Thanks for mentioning that. Tiger Brands, basically, Enterprise Foods, which is said to be the source of the listeriosis, a breakout that we've been experiencing here in South Africa. Well, Tiger Brand is the parent company of Enterprise Foods. And as a result, people have been, putting their money where their mouth is and selling off those Tiger Brand shares to the tune of about 7%. It was down by about 7.4% earlier in the session. So shareholders, they're rattled by this situation. And Tiger Brands is supposed to come out with a media briefing later this afternoon, hopefully to allay those concerns. Of course, there's been immediate action to remove all these various products off market shelves. We've seen that with ShopRite, Checkers, Pick and Pay, and of course Woolworths as well, also deciding to remove some of its Vienna and Poloni products. So there's been action on that front. So we have to wait and hear what Tiger Brands has to say, but it hasn't affected them in a very positive light. Obviously, Rainbow Chickens as well, RCL, also was down by over 3%. Jitters around that company as well, and some of the products they're selling. In terms of the broader bourse, we're seeing the all-share index in positive territory at the moment. It opened in the negative following the Asian markets, which closed negatively, but it turned into positive territory around just after 11 or so. But there's still a lot of jitters globally about this trade war that people think may happen if there is this retaliation, what with the import tariffs. Let's take a look at the indicators. And so I'm joined by Gary Boyson, Portfolio Manager at Rand Swiss. Thanks for joining us, sir.
Thanks for having me.
Great stuff. Markets globally rattled by the possibility of trade wars. What's the significance of this import tariff on steel and aluminium products that was introduced by Donald Trump? What does it mean? And if there should be retaliation, what does that mean?
Well, certainly, if you look at, I suppose, the global history of, free trade and the increasing gains that the globe has made because of a promotion of free trade, it's been incredibly positive to see, goods and services flowing between countries in an easier way. It all really comes down to, I suppose, the concept of what's called competitive advantage, where, if you can produce something at the lowest cost, you should be the one producing it and rather exporting it, and each country focusing really on what they're good at doing. Now, the problem with introducing tariff barriers, and this, essentially what happens is, sure, the government in the US, by increasing tariff barriers, is going to earn more money every time a foreign product is sold in America. The problem is it distorts the way that goods and services around the world flow, and that in toto actually reduces global global output and global productivity. So if you look at if you actually have a look at the warnings that have been issued by the World Trade Organization, the IMF, and you look at the way that Europe is reacting to these tariffs as well. Immediately, Jean-Claude Juncker has come out and said that they're planning on now, putting retaliatory tariffs up on, Harley Davidsons, Levi jeans, and a whole variety of other products. They're already talking to ArcelorMittal as well about, how they can, essentially, potentially also add steel tariffs as well. So it's certainly a very, very difficult situation for global trade, and with a reduction in global trade, you see a reduction in global wealth as well. So it's very, very concerning, and I think the whole point of Donald Trump's move to try and protect local businesses, it will to a certain extent, but by adding tariffs, all the imported products are going to be more expensive for Americans as well. So it's not the solution that I think he's selling to the American people.
One is hopeful that with the backlash, that he might actually step back and decide not to implement these tariffs. But should they go ahead, just for our local companies, you mentioned ArcelorMittal and another company called Hulamin, they export to the US. What sort of repercussions will it have for them?
Yeah, certainly. If you look at it, there's not too much reaction in the share prices at this stage. If you look at something like Hulamin, it's not a very heavily traded stock, so the liquidity is not fantastic. So, to look at a daily move and try and draw an extrapolation is also maybe not the best way of going about it. But certainly, it will have ramifications. But a lot of our steel is obviously used locally as well. So, and again, it's very difficult to tell how the trade patterns are going to be distorted. So one of I think the big goals of the Donald Trump trade tariff was to try and protect the American worker from cheap Chinese imports as well. The problem is only 3% of steel imported by the US that comes from China, and the people that are going to be most affected are actually going to be the Canadians, who are now desperately scrambling and trying to work out a way of perhaps getting a reduced tariff for them. But so far, you mentioned that perhaps Donald Trump might take a step back. He's been very, very adamant that trade wars are good, which any economist will tell you is just not true.
Doesn't sound like he did his homework from what you're telling us. Now, we heard yesterday as South Africans from the health minister that the listeriosis problem or breakout has been identified to come from an Enterprise Foods factory in Polokwane. And of course, as I mentioned, Tiger Brands is the parent company of this Enterprise Foods company. We've seen the share plummet by 7%. Now, do you think that this situation is going to be very damaging for Tiger Brands, or is it all going to be in how they manage their communication around this? Because I suppose this could have happened to anyone.
It could have happened to anyone, but it didn't. It happened to Tiger Brands, and that's, I think, they're very serious questions that have to be asked around it, because obviously there is that human factor. I mean, 180 people are dead. This is not just a competition issue, or this is affecting people's lives as well. So very serious questions have to be asked, and at the same time, I mean, the standards that go into making sure that the factory is safe, and I think we don't have that information at this stage. But I mean, if you look at the actual impact on the company, I mean, they have released a SENS announcement. You mentioned that they are going to hold a press conference later today as well. But certainly, I mean, the share price under a lot of pressure, and the company saying that they've issued the recall as per the Department of Health. They are in the process of a deep cleaning of the facilities, and I'd imagine there are going to be all sorts of investigations and I suppose litigation as well around this, and it's certainly going to impact shareholders. If you look at the actual I suppose value of the meats business that's affected, it's about 7% of Tiger Brands revenue and about 2.3% of operating profits. So it's a significant portion of their business, and unfortunately, it's not just the lost revenue from having to deal with the recall. It's the potential litigation. It's reputational issues as well. I think the retailers, if you take a step away from Tiger Brands and look at the likes of Pick n Pay and Shoprite, I think they've handled it pretty well, and you probably will see a limited impact there, because while people might not be buying the enterprise products, the Frankfurters and the smoked Russians that have been identified, it's their substitute products, I imagine, will take up the slack. So it's certainly it's a very interesting. I mean, it's a story that's obviously unfolding at the moment, and we'll keep a very close eye on it to see the potential damage that could be had.
Now, tomorrow, Stats SA is going to give us the information on the Q4 GDP number. What's your expectation for that quarter and for the year more broadly? And just about how the economy is looking going forward.
Yeah, so again, there's been a lot of optimism around South Africa at the moment, but that's yet to feed through to the actual physical numbers. So any GDP number is always going to lag, the financial markets, so lag currency, lag, stock prices as well. So it is slightly backward looking, but at the moment our expectation is to see a little bit of a recovery in total 2017 GDP up to about 0.9%. I think that's up from 2016 from about 0.6%. So we are seeing an improvement, and this is coming mainly in the primary sector. So it's agriculture, mining to an extent as well. Although gold and platinum has, the lower gold and platinum prices has subdued, the activity in those sectors. The agriculture obviously recovering still from the drought conditions. So that helping to boost primary sectors. Manufacturing also has now turned the corner, and it seems to be growing again, which will be a positive contributor to the GDP growth, we think, and that again, that also I think generally the global situation has improved. So in emerging markets and developed markets, that's helping our manufacturing capacity and our manufacturing output. Tertiary sector is still going to be under pressure, unfortunately, and also construction, I think, going to be under significant pressure in the number, and that's probably one of the detractors. All right,
we'll wait and see tomorrow. Thank you so much for your time and your insights, Gary. Gary Boyson, Portfolio Manager at Rand Swiss. After a short break, Nzinga with more business news for you.